Hey guys, welcome back to my YouTube channel. It's Matuizi here, and on this video we'll be talking about market analysis. When you analyze something, you basically uh, examine. You examine for a particular purpose. You examine to see if there's going to be a change or to understand a change when you analyze something. Now, if we talk about the market analysis, all we are looking at is what are the things we can do so that we can understand how the changes of the market is going to play out. That is the concept. If we come into the forex business, we see that you basically are trying to predict the future. That's the concept. You're trying to predict what's going to happen next in the market. And truth be told, you require some form of analysis to be able to predict correctly most of the time how the future can play out in the forex market. There are different types of analysis in the forex uh, market, in the trading space. There is fundamental analysis, there is technical analysis, and there is sentimental analysis. So I go again. There is a fundamental analysis, there is a sentimental analysis, and there is a technical analysis. These three types of analysis are what traders use on a daily basis to predict the direction of the market. Now, as a trader, I urge that you know a bit of the three type of analysis, so you know the one you are actually focusing on and the ones to really to avoid. You understand? So it's not all you pay attention to, by the way, but at least the one you pay attention to, you're going to try your best to make the most out of it. Now let's start with the fundamental analysis. The fundamental analysis basically just means the economy, the macro economy, like the things that are going on in the economy of a currency of a, or a country that is making the value of the currency depreciate or increase. Now, for example, things like diseases outbreak, things like crisis, things like war happening in a particular country can have a very drastic effect on the price of that country's currency. During COVID-19, you also how the whole world was on lockdown. That really affected the prices and the strength of the currency of different countries. The dollar was affected, the Great Britain pound was affected, the euro was affected. Basically, all the currencies in the world was affected. Why? Because of this global event. Now, for example, again, if you have a war in a country like Russia or Ukraine, their currencies of those countries will definitely have a very weak period now because of their going through that crisis. Now, how do we use it in the forex market to make money? For example, you are opportune to be among the first set of people to get information about a particular outbreak or a particular war that's about to happen, and or you have been analyzing and seeing that there's something that you are foreseeing that's going to happen in a country, either a crisis or something, and you observe that it's going to really affect the country's currency. Now, once you how to make money from that kind of situation is you are definitely going to retrieve, if you have any amount of money in that country's currency, you are definitely going to retrieve such amount of money and get a currency that is stronger and put your money in that. For example, if the US dollar is strong and the Canadian dollar is having a crisis, you are definitely going to put your money from Canadian dollars, you change it from CAD to USD to allow it to remain stable. Why? Because once Canadian dollar is going to receive that economic factor, economic downtime, it's going to affect the CAD value. If you have some money in CAD, that's in Canadian dollars, it's going to affect the value of that your money that you have in that country's currency. So it's wise to just take that your money out of the country's currency and put it in a stable country's currency during that period of that insurgence or whatever is going on. Then maybe when the country is now balanced back, you can now take your money and purchase most of the uh, currencies of that country. When you take your money out of the country to get US dollar, or for example, you're just a foreigner and you observe that there's going to be a crisis in a particular country, you can buy so much of that country's currency by investing in higher currencies that can buy more of that USD, of that CAD, for example, in that former case. Then when it's time to now, when the currency is now getting strength back, your money is going to definitely be increasing in size, in value, because when the initial currency that's having that issue with the crisis start getting their feet on the ground again, your currencies, your own investment would have started increasing by that time. Also, take for example this naira and dollar issue that's going on. You and I know how back in I think 2018 or 20, no, let's make it 2021 thereabouts. Let's not go too far. Back in 2021, 2022, we still had dollar around 700 or thereabouts, 700, 800. Then if we had $1,000, it would be around 800,000 naira. And as you can see, currently dollar is around 1,500 naira. And people that had dollar then definitely would have doubled their profit in naira coefficient. For example, if you had $1,000 at 2022 and it was worth 800,000 naira, currently your naira is going to be worth 1.5 million naira. So that's the way of increasing the value of your portfolio, just by capitalizing on the economical factors of the currency at that particular time. Now, let's go to the second angle of fundamentals. Those are macro fundamentals that can affect the particular currency. Why there are things like fundamentals that go on during the month. That's news events. Now, for example, if you have a news event like NFP, non-farm payroll, or you have a CPI news come out, it's a release that comes out every first Friday of the month. That's NFP. Why CPI comes out during the week? That's around Tuesday, Thursday, depending on the time they schedule it. Those events, those news events, they are like releases that when the financial um, banks of the economy, that's the Federal Reserve, releases those news events to their economy. Let's say in US, for example, the information that they put out concerning the amount or the value of that news event is going to definitely affect the market. Why? Many investors take their positions or take their trades based off of those values of such news events. For example, the non-farm payroll now can come out with a 1.4 or 4.5 estimate or actual value for the month. Then investors are seeing that as a sign to get a long on a position. Then they start buying more of such commodity or such currency. Then with time, the currency increases in value and they make their profit. So those events are very aggressive when it comes to the chart and the actual chart itself, because they can move the market so drastically up or down depending on the kind of the news, whether good or bad. So as a trader, you're meant to always keep your head high, keep your head out, looking for such news events so you don't get trapped in a position where you are buying and the news is coming out and it's going to sell the market. You understand? So you have to make sure you are staying safe with your positions. Either you close them before the news comes out, or if you feel you can hold them along with the news, that's on you anyway. But it's safer you close your position before the news activates, so you don't lose out on the profit you have been making before the news comes out. So that is basically on fundamental analysis. Now, when we talk about the sentimental analysis, what do we talk about? Basically, sentimental analysis from the name, sentiment, meaning how I'm feeling towards something. Bias, I'm trying to just, let me just cheat what I'm doing, basically. For example, if I come to the chart today and I feel that I'm saying that the market is giving me blue candles, sorry, green candles in your case, because I use blue candles on my own chart. Market is giving us green candles, that is going bullish, and I've not seen any red candles so far. I might feel that okay, yes, this will continue going up. Let me just buy. That's already a sentimental analysis based off of my feelings of what I'm seeing in the chart. Most of the time, a lot of beginners and greenhorn guys come into this market, and that is the major analysis they do, sentimental analysis. They just have a feeling that this is going to buy. Then they click on buy with their hard-earned investments and they lose the money. Or some have beginner luck and they make money. When they make money, they think Forex is that easy. Then they start investing more. And definitely the market will always collect it back. So now sentimental analysis is that analysis that you do with your feelings. You just do it based on I think this will sell. Let me just keep a set position there. I think it will buy. Let me just keep a buy position there. And you come out with the result. Now, basically, You might hear this sentimental analysis and feel it doesn't make sense, or it's not as tough as you want it to be. But I can tell you for a fact that any analysis that you choose to do, whether it is fundamental, whether it is sentimental, whether it is technical, you can be profitable in forex trading if you do it right. If you apply what? Risk management. Now, talking about risk management, if you don't have any idea of risk management, you can click on this video to watch my risk management video. It's on my page somewhere that you can also search it too. So with risk management, you can also make money out of any type of analysis you choose to do, whether you choose to do a fundamental analysis, or you choose to make a technical analysis on your chart, or you choose to use sentimental analysis. Any analysis you use to trade the markets, you can make money from the markets consistently if you apply proper risk management. Now, let's go into the last type of analysis in the forex trading space. This is called the technical analysis, and this is the one that has the most of drawings, diagrams, lines, the other things. So basically, technical analysis is using prehistoric data of the market to analyze the future price of the market. You are trying to use the pre-data, that's the former things that have happened in the market, the former chart of the market, to analyze how the future is going to play out. For example, if you have seen a head and shoulder pattern happening in the previous year in a particular sequence, it happens that it does head, shoulders, then it breaks the neckline, you test it, gives you an engulfing candle, then you take your trade and you put your stop loss. That way, you're already creating a system around that head and shoulder pattern as your own strategy. Now, if you see that all you see is supply resistance, you see that okay, around this point, market always bounce off this point and keep buying from here as a support zone. Then in future, you are expecting that when the market comes back to that zone, you take a buy also and get your trade running. So basically, any how you choose to go about your technicals, whether you are using support and resistance, you are using Fibonacci, you are using SMC, ICT, any type of trader you are, you can definitely make money if you do it right and if you use the proper risk management. I don't really select any strategy by the way. I don't advocate against anybody's strategy. You can use what you are using and make your money. The concept is if you really are profitable, all those strategy you are mentioning, it won't matter. It won't really matter if you really know what you are doing. Because somebody can just come to the market with sentimental analysis and make a steady income over you that using ICT or that block, the demand zone. Nobody sends you. If you like, use Fibonacci. If you like, use all the tools in the old trading view chart. If you will not make money, you will not still make money if you don't know how to trade. Because trading just goes beyond, it's beyond your analysis, it's beyond your lines, it's beyond your okay, I feel it will bounce off this zone. If you will lose, you will lose. So it's how you now manage your psychology, your risk management, and also that analysis you are doing that now makes you money in the long run. You might lose today, but you might be profitable in the long run. So you are as a trader, you have to think in a different way than every other person in this life. So concerning the analysis you'll be using, me myself, I use technical analysis, and I take some of fundamental knowledges, so I don't just trade blindly. Basically, if I see that there's something that's going to happen in the chart by 2:30 Nigerian time, I observe that okay, any trade I'll be in before 2:30 Nigerian time, I try to close some profits or break even that trade because of the news that's coming out. So these are the things you have to be very, very observant about. Not that I'm trading fundamental analysis basically, but I'm managing my position with the knowledge that I know about fundamental analysis. You understand what I'm saying? So the point I'm trying to make to you guys is any analysis you choose to use today, anyone you feel that is nice to you, you can go ahead with it. Just be very good at it and apply proper risk management and have the right psychology to balance it up. And I promise you, in the next 1-2 years, you are going to get where you want to be in forex trading. So I hope you like this video to this point. For more videos like this, I want you guys to stay tuned to this channel. Please turn on the post notification button to receive more videos like this. Then subscribe, like, comment what you feel about this video. What else? Then you can join my free Telegram channel. Links in the description box. If you want to use my broker, you can also sign up with my broker. The link is there too. If you want to follow me on IG, my name is Matthew. You can search my name on IG, MATHIWIZZY. And I'll see you guys in the next video. Peace out.